Welcome to the weekly market recap with Sampath Securities. Let's take a look at some of the latest developments in the Sri Lankan economy and financial markets. Sri Lanka's current account recorded a deficit for the second consecutive month in May 2026, reflecting continued pressure on the country's external sector. According to the central bank, the current account posted a deficit of $194 million during the month. The deficit was mainly driven by a wider merchandise trade gap and a moderation in the service surplus despite higher workers' remittances compared to the previous year. During the first 5 months of 2026, the cumulative current account recorded a deficit of $97 million. The merchandise trade deficit widened in May as import expenditure increased at a faster pace than export earnings. As a result, the cumulative trade deficit for the January to May period expanded to $4.7 billion compared to $2.7 billion in the corresponding period of the previous year. Fuel import expenditure more than doubled during May, increasing by 112% year-on-year to $536 million, mainly due to higher global oil prices and increased import volumes. However, compared to April 2026, fuel import expenditure declined by 39.5% in May. Meanwhile, expenditure on vehicle imports increased by 20% compared to April 2026, reaching $250 million. Cumulative spending on vehicle imports during the first 5 months of the year amounted to $1.07 billion. The report also noted that Sri Lanka's terms of trade deteriorated as import prices increased at a faster pace than export prices. Meanwhile, the surplus in the services account declined by 36.8% year-on-year to $143 million in May. The cumulative services surplus for the January to May period also contracted by 20.8% compared to the same period last year. Tourist arrivals increased by 9.6% during May. However, tourism earnings declined by 5.1% to an estimated $156 million. For the first 5 months of the year, tourism earnings fell by 11.9% to $1.36 billion. On a positive note, workers' remittances remained strong. Remittance inflows reached $847 million in May, while cumulative inflows during the first 5 months of 2026 increased by 26% year-on-year to $3.9 billion. Meanwhile, foreign investments recorded net outflow of $23 million from both the government securities market and the Colombo exchange during the period. Gross official reserves stood at $6.9 billion at the end of May, including the swap facility with the People's Bank of China. According to the report, the Sri Lankan rupee had depreciated by 7.9% against the US dollar on a year-to-date basis by the end of June. Sri Lanka's construction sector regained momentum in May 2026 as a steady flow of new project awards pushed industry activity back into expansion territory. According to the Central Bank's Purchasing Managers Index or PMI for construction, the index increased by 59.1 in May from 45.7 in April. The improvement reflects the resumption of construction work following the seasonal slowdown during the April festive period. Meanwhile, the new orders index climbed to 63.6, indicating that construction companies continue to secure new projects at a stronger pace. The latest survey suggests that the industry's project pipeline remains healthy despite high borrowing costs, rising import prices, and continued global uncertainty. Construction companies also expanded recruitment during May. The employment index increased to 56.1, while purchases of construction materials rose sharply in line with high project activity. The construction sector is widely regarded as an important indicator of future investment trends due to its close links with infrastructure development, tourism projects, industrial expansion, and real estate activity. However, the survey also highlighted several challenges facing the industry. Many construction firms reported an ongoing shortage of skilled workers despite continued recruitment efforts. Labor shortages driven by outward migration and skill mismatches continue to affect several sectors of the economy. Construction companies also reported rising prices for key building materials. In addition, shortages of inputs such as bitumen continue to place pressure on project costs. Despite these challenges, business confidence remained positive. According to the survey, construction firms expect activity to remain strong over the next 3 months, supported by a steady flow of new projects and expectations that geopolitical tensions in the Middle East will ease. Sri Lanka has been reclassified as an upper-middle-income country by the World Bank Group following the country's economic recovery and stronger growth performance in 2025. The upgrade moves Sri Lanka from the lower-middle-income category and reflects improvements in the country's macroeconomic performance after emerging from one of its most severe economic crises. According to the World Bank, the reclassification follows Sri Lanka's real GDP growth of 5% in 2025, signaling stronger economic fundamentals and high national income levels after a prolonged period of economic contraction and macroeconomic adjustment. The World Bank updates its country's income classifications annually using gross national income or GNI per capita calculated under the Atlas methodology. Based on this methodology, economies are classified into 4 income categories: low income, lower middle income, upper middle income, and high income. The income thresholds are also revised annually to reflect global inflation. According to the World Bank, the revised classification reflects an increase in Sri Lanka's national income per capita. However, the organization has noted that these income classifications are intended for analytical and operational purposes and do not by themselves provide a comprehensive assessment of a country's overall level of development. Sri Lanka's headline inflation, measured by the Colombo Consumer Price Index or CCPI, accelerated by 6.8% in June 2026. According to the Central Bank of Sri Lanka, headline inflation increased from 5.5% in May, mainly due to continued increases in domestic energy prices following the conflict in the Middle East. Non-food inflation rose to 8.4% in June compared to 7.8% in May. Food inflation also accelerated sharply, increasing to 3.6% from 0.9% in May. Compared to May 2026, the CCPI increased by 2.1% in June. Food prices accounted for the largest share of the monthly increase, mainly due to high prices of fish and vegetables. Non-food items also contributed to the increase in consumer prices during the month. Meanwhile, core inflation, which exclude volatile food and energy prices, edged up to 4% in June from 3.9% in May. According to the CBSL, inflation during the second quarter of 2026 remained broadly in line with the projections published in its May 2026 monetary policy report. The central bank expects headline inflation to remain above its 5% target in the near term before gradually easing towards that level over the medium term, supported by appropriate monetary policy measures. However, the CBSL cautioned that inflation outlook remains uncertain due to continuing tensions in the Middle East and their potential impact on both the global and domestic economy. Among the major expenditure categories, transport recorded the highest annual price increase at 18.7%. Restaurants and hotels followed with an increase of 11.9%, while education rose by 6.5%. Housing, water, electricity, gas and other fuels recorded an annual increase of 6.3%. Food and non-alcoholic beverages increased by 3.6%, while recreation and culture was the only category to record negative inflation. The CBSL also noted that the CCPI, compiled by the Department of Census and Statistics, measures changes in the prices of goods and services purchased by households in the urban areas of the Colombo district. Let's take a look at this week's Treasury-bill auction results. With the recent Treasury-bill auction, the 91-day TB rate stands at 10.23%, up by 9 basis points. The 182-day TB rate stands at 10.30, up by 9 basis points. And the 1-year TB rate stands at 10.20%, up by 3 basis points compared to the previous week. Thank you for watching. We'll be back next week.